Hi everyone and welcome, and thank you for your patience. I'm just waiting for David to confirm that he's actually started the recording. Hopefully you should see my screen. I'm looking over at David and you will see the YM. Don't worry, we will get to that in a minute. But before we start talking about what's been going on and what is likely to be going on and why it's going on, as always, those of you who come along regularly will have seen this before, and I'm sure you've seen it in similar webinars as well. It's the usual disclaimer, please, this can be a very risky business. Please don't ever think of using money that you cannot afford to lose. Right, this evening, where shall we start? I've got the YM and I've also got the NASDAQ up. We're just going to focus on NinjaTrader today. David's got Ninja 8. I'm actually still a bit of old school. I'm still on Ninja 7. I haven't quite, I don't know. Sometimes I love Ninja 8 and then it drives me nuts and I go back to Ninja 7. But this is one of my workspaces, and when you compare what I've got with David's got, you can see we're very different. I have slightly more indicators on my charts than he has, but essentially the thing is, what we're going to be looking at today, we're going to start with a couple of things. First of all, it's obviously October, and last week was a very lively week, and this week looks as though it's going to carry on in that vein. Now, two things. October. You may have come across something called the October effect. And this is the market's traders and investors' view that terrible things happen in October. And indeed, terrible things have happened in October in the markets. In 1929, during the Great Crash, I think they've had the 3 worst days ever. And of course, we have the crash of 1987, which was the 19th of October. But actually, statistically, for stock markets, October isn't the worst month. It's actually September. But there we have it. You have something called the October effect. And what that tends to happen, how that can feed through into traders and investors, is you have something called confirmation bias. And this is where we have this information running in background, and what we tend to do is when we look at charts, we kind of look for confirmation to support the theory. And you'll come across these things with seasonality. Now, it is genuinely true that there are times of the year when gold tends to make more of a move than at others, and certain currencies will move, and there are patterns. You can see patterns in all sorts of places, but whilst we have to hold that in mind, and do remember these terrible events that happened, as I said, back in not 29, but certainly 1987, which is more within living memory. I think the Dow lost, is it 26% that day, David? It crashed a huge amount. You do have to also just look at what is on your chart, and what we can see on this chart with NinjaTrader is, what do we see here? Today's price action. We've had a huge fall coming in to the open. This is actually the YM. I've also got the NASDAQ. It's actually more dramatic on the YM. The NASDAQ isn't quite as dramatic as the YM, but David will talk about the NASDAQ over on his, as I said, on Ninja 8. And what has happened, whether it's traders thinking about the October effect, who knows? Market crashed down, and look what's happening is a ton of buying has now come in, which is actually a similar pattern that we had on Friday. This was after NFP, and it's actually the same similar action that we had on Thursday. So this market is not ready to die just yet. Yes, there have been interest rate rises. Yes, bond yields are certainly on the 10-year over the key 3%. This is when you can have this rotation from stocks into bonds. Things are perhaps a little fragile, but if you're a trader, that's awfully interesting. You really have to see and react to what you are seeing on the chart. And really the only indicator that is going to tell you, validate what you're seeing on the chart is volume. And we're going to have a look at a 10-minute chart for, a 5-minute chart for the NQ, where you will see that in more detail. Before I pass to David, for those of you who haven't come along before, this is the NinjaTrader platform, and the indicators that we are going to be focusing on are from the quantum trading, our own quantum trading site, and they're from what we call the Essentials package. So I'm just going to skip back a step, and basically all the details of the indicators, videos on how you use them, how you can use them, how we've developed them, they're all at this site. As I said, if you go over to quantumtrading.com, there is a subdomain there which is Ninja Indicators, and you can find all the information about the indicators there. Sorry, I wanted to just step back on that because I know some people who have come along for the first time may not be aware of what we're actually using. We will mention them as we go along, as they how appropriate they are to the price action, in particular the volatility. What I've got here, this is the volume point of control. This is a hugely important level for the Dow, for the YM, and as you can see here, it's 26,000, and also on the NASDAQ, we have the VPOC at a key level. But I'm just going to pass over to David. David, can I just pass over to your screen straight away and pass over to David? He's going to look at the indices, but we're also going to have a look at some stocks as well, because today is our stock and indices session. If you've got any questions, if you've got any stocks that you want us to have a quick look at, or questions about anything that you've been trading, then just pop them into the chat box, and we'll do our best to answer them.
Thanks, darling, and a very warm welcome to you all. Hopefully you can hear me okay. Yep, and I can see over Anna's shoulder that my screen's come up, so you should be seeing that as well. This is Ninja 8, which is a little different to Ninja 7. It took a long time to roll out, and it was fraught with issues for us as developers, but we got there in the end. So all the indicators are available on both platforms. It's your choice. If you want to use NinjaTrader 7 and subsequently move to NinjaTrader 8, it's a very simple hop over from one platform to another. So it's very easy, very straightforward to do. And they work in exactly the same way on both platforms. What I've got set up, this workspace, which you may have seen last week, is really to try and give you a sense of the importance of using different time frames, different time horizons, and also to highlight the different charting mechanisms that you can blend together in whatever style of trading it is. Clearly, what we're looking at here is very much an intraday workspace. This is for the YM, exactly the same. I think, were you on the YM or on the NQ? I can't remember, darling. You're on the YM. So it's exactly the same chart as the YM. We're on the December contract. And very quickly, I've got 4 charts here. Top left, this is the tick speedometer. I've got this running on a 2-minute time horizon. And this is basically delivering the tick speed setting for our tick charts, which you can see down here. I'll come back to this a little bit later on. Over on the right here, I've got 2 tabs. This is one of the major differences that you have on Ninja 8 as opposed to Ninja 7, is you can actually toggle and set up a whole raft of charts on the same chart using the tab system. But I've got the Renko set up here, and I've also got the tick the same for the YM. These are all linked together. Down at the bottom left, we've got the daily chart for the YM, and over on the right-hand side, we've got the 10-minute time horizon, but it could be one of several. But it just gives us perspective. If I just pop this up full size, make it a lot easier to see, and just pull this out, you can see, I've just moved the chat box there, forgive me, just move that down a little bit, get out of the way. There we go. One of the things that strikes you immediately about this chart and really goes to the heart of volume price analysis, it's really looking at the dramatic ramping up of volume over the last 2 days, and that will probably follow through today, even though this is actually a holiday. So the volume on today's price action always has to be viewed with that caveat. But the precursor to today, it was certainly significant. And what was so significant about it is just the levels of volume associated with the last 2 days. That in itself is enough to give you some alarm bells that there is something going on in the market purely by the fact that we've had double the volume occurring on these 2 days as opposed to the last 2 or 3 weeks at any rate. And certainly much higher than pretty much anything else we've seen throughout this period. This is August back here, we're in July back here, etc., etc. So we've got 2 very high volume days, but more importantly, with regards to the price action, what we've seen on both days is this big fall and a recovery, a big fall, big wick to the bottom of the candle and a recovery. Now that can only mean one thing, and it means that on those particular sessions, on those particular days, the big operators were moving in heavily to buy. The market was falling out of bed, looked as though a price waterfall was on the cards, and then at some point during the session they step in big time and come in and buy the market as it's falling, and they've done that on 2 occasions, and we're now seeing a repeat of it on day 3. What that tells you is that in this particular time horizon, then we are seeing further buying coming into the market, very, very strong buying, and as a result, likely to see this market continue higher in due course, because the market is not prepared to fall right now. It's there have been many factors, not least of all, obviously, NFP and a stronger dollar and all the implications for companies and businesses and all the rest of it, and that relationship does hold good. And obviously you've got the bonds as well in the background, but this market is not yet ready to fall, and it's clearly signaled by the fact that we've got huge volume coming into the market, buying the fall in the price action, and what we like to see thereafter is a recovery and potentially a breakout into yet new high ground. And I can assure you, probably when Thursdays and Fridays collapse was going on, people were writing about this is the collapse, this is the end of the bull run, blah blah blah, all the rest of it. Well, you know, volume tells a different story, and volume always tells the true story. So that's the daily chart. And in terms of the indicators and in terms of support and resistance, as Anna said, we've got the volume point of control sitting here. This is the fulcrum of the market, if you will. This is where price agreement was reached for this particular contract, for this particular market. It wasn't, whilst the volume was the greatest, certainly it wasn't the greatest by a large distance. You can see here we had big volume here. We also had large volume here. So in terms of where the VPOC sits, the volume here is the highest on the chart, but not by a great amount. And down at the bottom here, we've got the trend monitor, which has remained pretty much steadfastly blue throughout this period. It remained blue through here. We had a minor transition through to a darker color, which signaled a potential weakness coming into the trend. But then as the trend reverted back higher again, we revert back into bright blue. And the same also was true here, where we had quite an extended phase here, quite a bit of weakness coming into the market. We transitioned into darker blue. Then we went into darker red, potentially on a reversal of a trend from a bullish trend into a bearish trend, in other words, from a primary bullish to a primary bearish. But then we went back into darker blue as the market started to take off again, and on up to the volume point of control, and on we go. Now that could be on any chart, it just so happens to be on the daily time frame. And when you come down to the intraday trading opportunities, this is certainly one of several charts that we could highlight, which really cut to the chase that volume price analysis and some of the key aspects of it, and also in combination with the indicators as well. What we saw at the start here was one of the nice things with NinjaTrader, I've mentioned it before, but one of the really nice things with Ninja is that it will print the time frames to your local time. So wherever you are, you can recognize immediately points in the trading session. We're in the UK. This is 2:30 UK time. This is when the US market opens for us. And of course, we've got daylight saving coming, so that throws a spanner in the works temporarily. But generally speaking, you're able to pick these points out very easily, very quickly, something you can't do on MT4 and MT5 so easily because it's all tied around the servers. We had the open, big surge in volume, lots of volatility. We get this all the time. When you get the opening of the market, you get these big moves, lots of volatility coming in, big surges in volumes, what you expect to see. And then what we get here, we get this classic arrangement of not only price action, but also of volume. We've actually written some posts about this sort of cantilever, what we call a catenary of price action, where the price is rising, but it's flattening all the time. And you're getting that sense that we're getting to the top. It's like the top of the hill, if you like. So we're climbing, but the gradient is slackening off the whole time. And in conjunction with that, what are we seeing with the volume? Equally, we're seeing volume falling away, falling away. So you've got a double signal, if you will, of price action, which is rising, but actually flattening in terms of the gradient and looking a little weak. And at the same time, you've got volume falling away. Now, we're all familiar with the fact that for markets to rise, they require volume to be rising, and it's not, it's falling. Now, having said that, you've also got to remember that this is a new session, that generally one often does see that sort of volume pattern arising purely because you get the big surge in volume at the start of the session. So this is partly as a result of the big surge. It's like, trying to think of an analogy, turning on a tap, the water comes out very quickly, and then perhaps you turn the tap down and the flow diminishes somewhat. And that is what you're seeing here. Then we start into the price waterfall, and the biggest candle is this one here, and we get the volatility triggered. And whenever you get the volatility triggered, it's not a guarantee that the market is going to reverse into the spread of the candle, but it's a strong signal. We had one here, it didn't happen. We had another volatility candle here. We know we've got volatility because we've moved outside the average true range. Now, on both these occasions, the price action, one could say this was sort of within the spread of this candle, but the price action carried on higher. There's nothing in the rule book that says when you get a volatility candle that it is going to happen. But it's always the expectation, the anticipation that it might. So it's a heads up warning that we've got volatility. And generally, what goes hand in hand with volatility is an increase in volume because the big operators are playing in this market when volatility is there. It's a marriage of convenience. They use it all the time. It can be triggered by news, fake news, if world events, you name it, doesn't really matter. That is when volatility is triggered. That is when you expect to see high volume. If it's associated, if it is anything other than a pure trap move, when you like to see medium or low volume. But generally speaking, where you see the high volume coming in and you get the volatility triggered, it's a warning signal that potentially the market is going to reverse in the spread of the candle, at the very least to go into congestion phase and potentially a full-blown reversal, which is what we had on this occasion. We had another event up here, which is again a signal of volatility. The market rushes up, and the reason that these phases of price action are so powerful for the insiders at any rate is that it triggers that emotional response in us as traders to think, oh my gosh, I've got to jump in before I miss this particular trading opportunity. If you imagine in this price waterfall that you've not taken a trade for the time being, and then suddenly this happens, and you see this big move developing, what is your emotional response if you're a slightly nervous trader who's been waiting, and then suddenly you see this, you think, oh, I've got to get in. I don't want to miss this one. I really must get a position in the market here because this market's going to fall out of bed. It is the most dangerous time, and that is what the volatility will help to you avoid in getting into those positions at precisely the wrong time, when actually you should be doing the opposite. If you've got a trading position, and we have trading positions all the time, when we see volatility coming into the market, if we've got a decent position in the market, 99 times out of 100, we will actually close that position out if we're trading intraday, and we will wait and see what happens. If it carries on, fine. If it reverses, fine. We've lost nothing. If it carries on, we've lost nothing. We can always jump back into the market if it looks as though it's continuing in the original direction. You have lost nothing. But once you see that volatility triggered, and remember, this volatility gets triggered in real time. You don't have to wait for the candle to close. So it's such a powerful indicator, and yet so simple. Another example here, market rising very quickly. We went into a congestion phase, but now we're building nicely up into this trend, and we're going higher, higher, higher. And just to bring in some of the other aspects of volume price analysis, we've got support and resistance. It's all about levels. And whether you're looking at levels, I've just got the accumulation distribution indicator on here, which delivers these levels, these dashed levels, the red and the blue. The thicker red and the thicker blue are stronger levels, as you would expect. The thinner lines here, the thinner dashed lines, are less strong areas of support and resistance. And as we reach each of these, again, it's another aspect to consider, whether the market is going to pause or whether it's going to break through these regions. And where we get obviously deeper regions of support and resistance, then you expect volume is going to come to the aid and drive that market through. And where they are slightly lighter, as for example here, we had a little platform build here, we had a little ceiling of resistance build here, the market tested, now we've broken through. We've got decent volume under here. And on the trend monitor, we can see two things. First of all, we've seen this transition from red through to darker red, into darker blue, and out the other side into bright blue. That is the classical transitional phase where you're moving from one primary trend to a complete reversal in primary trend. So we've gone from the bearish trend into the bullish trend, and we've gone through the two darker color changes as a result. Doesn't always happen. Sometimes it'll just go straight through. Sometimes it'll go straight from red straight to blue. Sometimes you'll get one or the other, but here we've got both, and it's just a very smooth transition through into the trend, which is developing nicely and breaking above the open of the market, which was down here. If we look at that in terms of Renko, Renko is just a really nice charting approach to use in tandem with time-based charts, because it does take out a lot of the noise of the market. These bricks are calculated automatically on the Renko optimizer. I've actually got this set to 1 minute at the moment. I can just check that. And we're currently trading on, it's just loading down here. You can see we get this little window appears, and it tells us to click on there, and we open our 12 brick Renko. And what the 12 bricks is delivering here is obviously 12 points, because we're trading on a futures contract, and this is an index for the YM. So the 12 refers to the 12 points, which is $60, which is worth having. So each of these bricks, in effect, is worth $60 on the small contract at any rate. So any of these moves is delivering some substantial opportunities. I've got the trend dots on here, which work brilliantly with the Renko. I've also got support and resistance, the accumulation distribution indicator on here as well. You can see here on the trend dots, works in a similar way to the trend monitor to try to, I mentioned earlier about the emotion of trading. When you see volatility, when you see speed coming into the market, your emotional response is to jump in. And what the trend monitor and the trend dots try and do is to smooth out those phases where your emotions are running high. If you're in this move, for example, and you start to flatten, you can see the trend dots here go gray. You don't actually go to red at this point, but they can revert back to blue. Now that is just helping to give you a sense that actually we've not seen this reverse in trend. There's a potential reversal on the horizon, but it hasn't actually reverted fully at the moment. So it just helps to calm that emotional response when you see a nice move develop, you've got some decent profit in the account, you haven't closed the position, and then the market pauses and congests. So this changes first, as you can see on the trend monitor, not a flicker. We're just still sitting with the move higher for the time being, which is very nice to see. So really that's just a whiz round on the YM. This is, as I said earlier on, this is very much at the other end of the scale. This is if you're trading on a tick chart, which is another non-time-based chart. Both the Renko and the tick are non-time-based chart. And you might think, well, why do I want to use that? There's one thing that you see on one of those charts, which is this. You see momentum in the market. You see speed. You don't see that on a time-based chart. All you see on a time-based chart is maybe volatility, where the price action oscillates back and forth. What you actually see on a Renko chart and what you see on a tick chart is that speed then appears as bricks or candles, because those charts work off a different metric. They're not working on time. In terms of the Renko, they're working off a brick size. So however long it takes to complete that brick, that is the amount of time that brick will take to build. So it varies the whole time. And with a tick chart, same principle. If you've got a tick chart, as we have here, the YM at the moment is running at 610 or 620. The reason we have two is because this can change very quickly on the actual, so it just avoids having to change the chart quite so frequently. But if we set this up to 610, so 610 ticks is the parameter by which the chart will build the next candle. So whether that takes a microsecond or 20 microseconds or half a second or a second or 5 seconds, 10 seconds, whatever it is, that is the time it will take. So obviously what you're seeing is the market speeding up and slowing down the whole time. You're seeing momentum. And that's also revealed with the color mechanism here as well. And I've just got the tick chart there. We've got that set at 610 at the moment. So very similar sort of situation to the Renko. You can see the trend monitor down here. The indicator's working exactly the same way. I've got the pivots on here, which just help to highlight where we are in the trading cycle of this particular trend. It helps to define when we're moving into congestion, when we're moving out of congestion, and where we are developing into a trend. As I say, the trend monitor down here at the bottom, we've had these minor transitional changes, but nothing major at the moment. And as the markets, the best time to watch a tick chart is actually when the market opens, because the price action will come out absolutely like a machine gun rattling out of the market, and the charts will be moving very, very quickly. And that's what intraday traders on. If you're a speculative intraday trader, these are the sorts of charts that you can use alongside your time-based charts. Let's just see where we are on the daily for the YM. Probably might be able to sit here. We're literally back at the open now. So we've gone all the way down and we're just starting to, just pull that up even bigger. We're just starting to move into green now. Market's continuing to recover. We've got the low here is literally there where my cursor is, almost down at 26.2. Didn't quite get there, got to 26.230 or 40, I think. And we're all the way back up here now, and we're just starting to turn green. And at the end of the session, this volume bar will fill in, it will complete, and we'll see how much volume we've got on the day. So we've got a heap of buying coming into this market at the moment over the last 3 days. Massive amount of buying. That is not to say that tomorrow this market is going to rocket. One of the principles of VPA that you have to get alongside very quickly is that when you see such strong signals, maybe you see a big hammer candle coming in. This is quite unusual. Having said that, just to argue against myself, this comes in, we see lots of volume coming in, big wick to the lower body, and we're expecting to see the market ping back. Now on this occasion it did. It surged the following day straight off the bat. That's unusual. It's not the norm. Normally what happens is the market will, for example, you could put the whole of this into context and say, well, this is a phase of price action where we're seeing buying coming in here. We had the rally, didn't look terribly strong, then we come back down again and we see some more buying coming in here. This reaction the following day, as I say, is quite unusual. Normally what you see is further consolidation and then gradually the market will take off and you move through the layers.
Can I just have it over my shoulder?
Yeah, I'm just going to pass back to Anna for a moment.
Start. Can you hear me now? Yeah. I just want to draw your attention to this headline on investing. I know we always recommend investing, and it's a great site. For a start, you have all the data over here on the right hand side. You've got indices, commodities, ETF, bonds. I think it's got cryptos as well. You can set it up. But this is what you have to be aware of. I mean, this is a very dramatic headline. Mirrors global market slump. Now, you think, oh my goodness, what's happened? And this was written 2 hours ago. And what's happened in the last sort of hour, it's just been a total reversal. This is how fast these things are moving these days. David and I have been in this game a long time, and certainly for the last, since the global the financial crisis, the last 10 years, it is tough because things change just so quickly. But if you understand what you're looking at when you're looking at a chart, and you recognize the price action, you understand the relationship between volume and price, you're not going to be spooked by those kinds of headlines. You are going to be in such a strong position. Now, I've actually got 2 versions of the NASDAQ. Let me just find out where the other one is, because that's right. Okay, I've got one with the volume point of control and without, and I've actually kept this chart very simple, and I've also got it on in white because it stands out a little bit better. And I really just want to pick up on what David was saying. Is I think if there is not a disadvantage is too strong a word, is the thing with VPA is we do get these strong signals, and it is so easy to then think, oh, I see the signal, because it is such a strong signal. You understand the relationship between price and volume, and sometimes you kind of got to hold yourself back a little bit and say, yeah, just let me, let it play out. And you can't help it, because you know what's going to happen next. And when it happens next, it is very, very, you do get a very deep sense of satisfaction, for the simple reason that so many traders out there are not getting it right, and you're getting it right. But you do have to sort of just take a little step back. And I think the 5-minute chart of the NQ really does sort of encapsulate it very, very well. First of all, we have obviously the Globex session, and you can see here, as David was saying, you've got this sort of gently rolling over effect, and this is Globex, and when the open came at 2:30, the chances are it's going to pick up the sentiment that had been prevalent in Globex. Now you have to also, you can see here what has happened to the volume. It's completely been compressed because of the sheer amount that came in at the US Open. You always get that once as we move on through the trading night and day, and we go back into Globex, then that becomes much more contextual. It's much more in context with the price action, and you read it in exactly the same way. So we have the open, and what do we have? Volatility. The volatility indicator is actually triggered on 1, 2, 3, 4, 5 candles, not subsequent candles, a little candle in the way here. This is it carried on with the sentiment. Then you get this massive amount of buying, and that's where you see it, and you think, and it's accompanied with a volatility candle. Oh, sorry.
Your cursor's over there.
Is it? Where is it move? Is it moving again? There we are. Look, it's just a bit delayed, I think. That's all. Okay. Is it okay?
Yeah.
Can you see me now? Am I pointing in the right thing?
Yeah.
Oh, well, there we are. Sorry about that. David was telling me my cursor's got a mind of its own. Do you want to talk through it? Because my cursor's... Okay. Is it that? Can you see the candle I'm referring to now?
Yeah, it keeps jumping to the left.
Oh, why is it doing that then? Let me see if I can get the crosshairs. I do beg your pardon. I hope. Right, let's have a look. How's that? Is the crosshair better? Yeah, this is the candle that, this is a very typical signal that you would see. And when it's accompanied with the volatility indicator, again, we know that price will retreat to within the spread of the candle. Now, we also then have a volatility triggered on the up candle, and yeah, there's a reasonable amount of volume under there. Then we have another up candle, a little bit more volume, but a wick to the bottom of the candle, but it looks as though this wants to go up. But look at the volume. There's a lower volume on the down candles. Then we have another up candle with a wick to the bottom. And then we have a very big candle with another wick. But look at the spread of the candle and look at that volume and look at the spread of that candle there, and you sort of get the feeling that, well, maybe this is going to run out of a little bit of steam, because this move from here to here has been very, very dramatic. And then we have a down candle, not a lot of volume underneath it, an up candle, again, the volume is falling away. And then we have this candle, we have the shooting star candle, not a huge amount of volume, but then everything has been distorted by the open. So again, we have to look at it in context, and it's relative. But the mere fact that it has this wick to the top of the candle is telling us there is weakness. We also have the pivot, and this is where the support and resistance. I'm using the volume point of control as my support and resistance, and I'm also running into the resistance here. You could use something like the accumulation and distribution indicator. You could just draw a line. You can maybe use, some people use Fibonacci. It really doesn't. But at that point, you think, this is looking weak, and in fact, the market then takes this dramatic fall low. And we have here, then when we come to this, the most intense section of the price waterfall is these three candles here, where we have rising volume on the down candles, but then we have another one of these dramatic signals where we have a down candle but with a deep wick to the bottom and high volume. Not quite as high as the volume at the open, but it's pretty high, and that is going to tell us that there is stopping volume in there. This is not going to carry on. Is not going to carry on lower. Certainly not at the speed that it has been going up until this point. Then we have a hammer candle with a reasonable amount of volume. We have a pivot, but what happens? This is what we mean about being patient with signals. This is the 5-minute chart, and it will congest and it goes sideways. We have a pivot here to the top. We have a pivot down here. It goes sideways until we see this is a 2-bar reversal. Put the volume together, it's a reasonable amount of volume. But you see the time it has taken from that initial signal before the market is ready to move higher. But you also have to remember the psychological context of this move. You had the open rushing up, traders maybe thinking, oh great, getting in here and then watching their positions being stopped out. Then suddenly the market reverses, so they think, oh, am I going to join the move lower? And it moves lower, but it's not a smooth move. It's nothing compared to this section of the move low, this sort of what I call the waterfall effect. And they're thinking, oh dear, I've been stopped out going up, and is it time to? Am I just reversing because I've come out, wrong side? Oh, okay, well, I'll just go the other way. But you wait, and they think, and they become nervous, and they think, well, what am I seeing? Is what is the price action telling me? I'm seeing candles with with some wicks, so there is price support coming in. Well, maybe I should be looking to go long again. Maybe I was just unlucky. You can imagine the conversations that they are having in their heads. And then suddenly, when the price begins to gather some momentum and some steam, that's when most traders get in and think, oh, right, it's moving. Now time for me to get in. And they probably get in about there when suddenly all the buying comes in. And this is what plays out time and time again. And it really does shred your nerves. It shredded our nerves at the beginning, before we really got to grips with understanding price action in conjunction with volume and using in those days we used standard indicators because we hadn't developed our own, but gradually as we began to understand more and more about price action, chart structure, and we also brought in all the other elements of trading, the fundamental, the related markets, the psychology side of trading, that we began to think, do you know what, I think we can develop something for ourselves. And that's really how quantum trading started, wasn't it, David? We wanted something for ourselves, but we've always developed these indicators on the premise that they can be used in conjunction with an existing approach, an existing tactic, and combined with standard indicators. So that's my little contribution to what David was saying about signals. 2-bar reversals, great. I haven't got the non-time-based charts on Ninja 7 because I haven't updated my indicators yet. I haven't got the Renko indicator optimizer. But when you look at this chart in conjunction with something like a tick chart or the optimizer, then what the Renko will do, it will help you not only pinpoint those crucial key turning points, and when you see with the candles and the wicks to the bottom and the volume coming in, your entries, the Renko optimizer can help you with your entries, will help you keep you in, and it will also help you, it will get you out as well. Now at the moment this is the move higher, we're back at the volume point of control. At some point here you can see this bulge in the histogram. The volume point of control would have been here, would have been here. This is, and this also would have denoted this congestion phase. So the VPOC not only would have given us our levels where price bounced off, but it would also helped us to give us some comfort, saying, look, we're just in congestion at the moment. Market can't decide which way to go. But as soon as it broke away from the congestion period, and you can see here, and also with the volume histogram, these are called low volume nodes, and when price action hits one of these low volume nodes, we know that it's going to go through very, very fast. When it hits an area of high volume node, you know it is likely to slow down, go into congestion, and that's exactly what it's done at the moment, because the VPOC is back up here at 73.80, David, about that? 73.80. Right, that's my little bit. I'll just pass back to David, and if you've got any questions, please drop them into the chat box. Is there anything else you want to say on that, darling?
Yeah, that's kind of, yeah. There we go, we're back on Ninja 8, which you should be able to see right now, hopefully. Yeah, there we go. And what I've done just down on the tabs here, Anne had mentioned related markets, and one of the things, just move the chat box down again. The bond market's not open today, but certainly in terms of related markets, one of the key charts and key currencies that you would be considering is certainly the yen. And this is the yen index I've just pulled up here. Just pop that up full size for you. And like it or not, the yen indicates risk. And whilst it will not move in absolute lockstep, generally speaking, what you will see is risk on, risk off flows will be highlighted very much through the prism of the Japanese yen. This is the yen index, which is part of the NinjaTrader package. I've also got the dollar index down here, and we also have a euro index, but I just wanted to focus on the yen index because it is the one currency above all else probably that signals risk sentiment both on and off. And indeed, over on if you wanted any more confirmation, if I go over to this workspace, this is the currency strength indicator, and a lot of traders of all markets will often say, well, why do I need to look at the currency market? It's not going to tell me anything. I'm an index trader, I'm a stock trader, whatever it is. And if you understand the relational aspects for the markets, because when all's said and done, it's just about money. It's return on money, which however you cut, slice and dice it, That's what the financial market comes down to. It's money chasing the best opportunity for a return, or it's looking for a safe haven. It's looking for somewhere where it's weathered from risk. And when risk on comes back again, then the money flows into other assets, other asset classes, etc. And that is the constant flow that is going on literally intraday and over the days, weeks, months, and years. And that's really all the financial markets boil down to. And just before I pass back to Anna, this is the yen, this magenta line. And if you were watching this, very, very heavily overbought. This was, where are we? This was 4:30 our time. So a couple of hours after the markets opened over here at 2:30. And as you can see, we've had strong, strong selling of the yen throughout the session. We're now very, very oversold on the yen. We're starting to see it flatten off as we come to the New York close, which has just gone through at 9 o'clock here. And if that's not enough to give you confidence, then boy, oh boy, I don't know what is. And just to highlight that on a currency chart, this is the euro yen, but I could pretty much have picked any of them aside from the pound yen, which is heavily politically influenced right now. But that's the euro yen. It just tells you, it's a mirror image, if you will, of what is going on in terms of the indices and stock markets and risk appetite. And again, all the indicators there. You've got the volume point of control. You've got the trend monitor, this wonderful transition through into the bullish phase. VPA, you can read for yourselves. We've got the low volume node here. We went through there pretty rapidly. As Anna said, when you get to these low volume areas, then you expect price action to move through there pretty swiftly, which it did, on up to the volume point of control and on higher. Lots of good volume under there. The same principles apply whatever market we're looking at. I'm going to pass back to Anna at that point. Sorry.
When David was talking about related markets, I looked on my Facebook page, and one of my contacts is a very, very respected commodities expert in India. He's a really, really nice guy, and he has he's been trading for many years and mentors and teaches in the subcontinent. And he told a story about and he has very much our approach in the sense that it's really important to look beyond the instrument and market that you are particularly trading, even if you are on a fast chart, because things move so quickly these days. We only have to look at that headline on investing.com. I really feel sorry for the guy who actually wrote that, because it takes a long time to, get together all the analysis on charts and what have you. And, by the time it's typed up and posted online and what have you, suddenly the market just, does a 180-degree turn. But Vishay was saying that he was talking to one, I don't know if it was one of his students or a fellow trader, and he was saying, oh dear, isn't it awful? Have you, about bonds? And this person misunderstood. He said, oh, is there a new James Bond film out? Honestly, Vishay sort of head in his hands, like, oh my goodness, how can you possibly trade anything if you don't understand sentiment? What is the market mood? What, is it risk on? Is it risk off? Where are you going to find that information? Because as I said, it changes so quickly. I just thought it made me chuckle. I hope it made you chuckle as well. Right, David, do you want anything else?
Yeah, just to oh, sorry, I had my microphone on. Did you have your microphone on there, by the way?
I've turned it off.
Yeah. I think I left my microphone on. Apologies if you got a bit of echo in the background. Just to finally wrap up, just over here on stocks. We've not spent much time on stocks today, but for those of you who were with us, I think it was a couple of weeks or so ago, this was one that we referenced. Let's wind that out a bit. In fact, let me put this on the daily time frame. That's on the weekly at the moment. There we go. Sorry, that's on the daily right now. Let me put it back to the week. That's what I wanted. There we go. This was one we talked about. We picked this up from memory off Finviz. We haven't actually pulled up Finviz today, but Finviz is a great site for. It's free. There is a paid version, obviously, but there is a free version, and you can do a lot of stock research, scanning, and it's just a great. It's a great place if you want to pick out some stocks if you're looking for stocks that move. This was one we picked out on the day. I think it was quite a big mover on the day. It was a 3 or 4% move. We were doing a sort of filtering on it on stocks just to pull up one or two and look at the charts. And this was one that caught my eye. And the reason it caught my eye because it's one of those price patterns, volume-related patterns that you're looking for to really give you a sense of when there's a possible opportunity for a reversal from a primary trend into a reverse primary trend. In other words, bearish to bullish or bullish to bearish. And this was one of the latter. This was one of the former, rather. We went from bearish to bullish. And what we were seeing here, we saw this very strong buying coming in, this big hammer candle. And it really makes the point that I said earlier on, that when you see these strong signals, imagine you see this signal coming in on the day and you think, wow, or this is on the week, I beg your pardon. You see that coming in after the end of the trading week. You think, great, that's what I'm going to put on my watch list. Lots of volume coming in. There must be buying coming into the market. Looks terrific. Let's buy that stock next week. Occasionally that does happen. Occasionally, that will be the scenario that suddenly the stock will take off the following week or whatever the time frame. But generally, this is more often what happens. You get a phase of congestion. Yeah, we had some further weakness come in, but the selling was drying away. And then we start to see the reversal. And I think what I said at the time, I think we were around here around $14.80, $15. I can't remember from memory, but it was something like that. And I said, look, this is one that I would be considering if I was looking at this as a potential longer term opportunity, because we've seen quite a strong phase of congestion, of buying, accumulation. And once you start to break through an area of resistance, which you can eyeball through here around 1520 odd, once you start to see a move through there on decent volume, then you can expect this stock to take off a little bit, and certainly at the very least return somewhere near. We've got the volume point of control up here, so we've got we've got some very strong resistance which was tested last week in this region here, which is around about $17, $17.20 with this blue dash line. So we know we've got a strong resistance here. The market's tested it. If we're going to continue higher, then we need to see decent volume. Where is this price action going to struggle? Well, certainly, once it gets up to 18 and 19, what we're expecting with this stock is certainly to possibly get to this region, but then to start to wallow a bit, because we've got this ton of volume sitting up here, huge amount of volume. So if this were a longer term investment, it's not one I would be looking at from an investment perspective, because I anticipate and I would expect and I would put a sizable amount of money on the table that when it gets to this region, if indeed it does, then it's going to move into a congestion phase and consolidate for some time at that region, purely because of the amount of volume that's sitting there as denoted with the volume point of control. It's still got a little way to go. If it gets to this region, then it should go through there. Then we're into the price region or the price resistance overhead. So it's going to struggle a little bit. You can see here on the trend monitor, we're in transitional phase. We've gone from bright red, went into darker blue now, haven't made the transition through to brighter blue. So from a sort of intraday trading perspective, or maybe a sort of a day trading, a longer term, 2 or 3 day, maybe something like that, where you're looking for opportunities for intraday stocks, where you're looking for those setups, that's the sort of thing that catches your eye. You filter them out, you look at the chart patterns very quickly. When Anna and I were trading heavily in covered calls, for example, we used to trawl through several thousand stocks literally daily, but we'd go through them so quickly because the chart patterns we were looking for would be instant. They jump off the page. That's what you're looking for. Are you looking for a saucer? Are you looking for a bottom? Are you looking for a top building? Are you looking for long-term congestion? That's what we were looking for all the time. We were looking for congestion phases where we could take opportunities to write covered calls and pull in the premium. You can do that very quickly and literally scan through. And the other way, obviously, is to filter it with a system, something like Finviz. If you've got a free one, there are lots of paid ones. We use ChartSmart for many years, which is a great package as well for filtering out all the stocks. You've got all the 10,000 plus US stocks, Canadian stocks, and what have you that we used to trade very heavily. That's it. I'm going to pass back to Anna at that point for a wrap up.
And just to recap, the quantum indicators that we've been using and today and explaining are from NinjaTrader from 7 and 8, and you can find details, as I said earlier, if you're with us at the beginning, from quantumtrading.com. You can buy one indicator, or you can buy, we have sort of bundles of indicators, or you can buy a complete package. What we have, what I think is unique the way we do it, is that when you buy an indicator, if you invest in the full pack, that's what I was trying to say. If you buy the full package, when we develop new indicators, for example, for NinjaTrader, we've recently developed something called the Renko Optimizer and a Camarilla indicator. If you've bought the full package, they'll just be automatically added to your package. You never have to pay us any more money. And certainly the one for NinjaTrader at the moment is the full package. That includes all the Forex ones is just over $1,000, but the Essentials package, which is the other indicators minus the Forex one, is about just under $800, David. It's actually cheaper than the MT4, MT5 in package. And what you get is you get 24/7 support, 365 days of the year. You can transfer from platform to platform if you want to. If you bought the Essentials and you want to go to MT5, which is a great platform because you also got stocks in there and indices, that's absolutely free of charge. But if you go to a platform that is slightly more expensive because it's got more indicators, all you have to pay is the difference. You get a lifetime license, as I said, all free upgrades. And if you don't like them, you just send them back. You've got 7 days and you get all your money back. So as I said, we operate this 7-day money back guarantee. Is there anything else you want to add today? Have I forgotten everything? We are back tomorrow morning for Forex. I know some of you come along to that session as well, so it would be great to have you join us. It really is, as I said at the beginning, October tends to be very lively anyway, and certainly the Forex market has been delivering in spades, and certainly with the British pound, with what's going on in Brexit. And that's been a fantastic, if you've been watching the Forex charts, I've been watching certainly the pound yen and cable today, there have been some tremendous moves. Again, I suspect a lot of traders would have just been, I don't know, they buy at the top, sell at the bottom. They do exactly the opposite of what they're supposed to do. But really, if you understand the price action and you add volume into it, you will not have anything to worry about, and you will certainly won't be be frightened out of any trade. So thank you so much for coming along today. If you need any more information, just drop me an email, anna@annacooling.com, or you can email david@quantumtrading.com. More than happy to answer all of your questions. We are back next Monday again, David. Yeah, when we'll be doing some more stocks, and we're going back to look at some commodities as well. So have a great evening, if it's evening where you are. If you're not with us tomorrow, we will catch you next week, same time. Take care.